presentation will summarise the corporate collapse of Parmalat and how, had a better application of the ASX corporate governance principles been applied, may have prevented the collapse of what appeared to be a stable and successful company. These principles covered include safeguard the integrity of corporate reports, lay solid foundations for management and oversight, and instill a culture of acting lawfully, ethically and responsibly. Relevant international principles and accounting theory will also be analysed.
Parmalat is one of the most well-known companies in the dairy industry, not just for its scandalous activities, but as an industry leader specialising in long-life milk products. Beginning as a small family dairy farm in Italy, founder and CEO Callisto Tanzi quickly expanded the company to over 50 countries. One such country Parmalat expanded to was South America. It is here in 1990 which the company's fraudulent activities would begin, when the subsidy suffered a loss. However, CEO Tanzi and CFO Tonner would choose to instead disguise this loss in order to not destroy perceptions of the entire company, paving the way for the next 13 years of fraud and unethical reporting. In the following years, losses began to occur more often and at greater amounts. To keep up, Tanzi developed a string of sophisticated but simple schemes to instead portray the company as profitable. The most significant scheme was the double billing scheme. The basic purpose of the scheme was to increase reported revenues by creating fake assets in order to use the assets as collateral against new bank loans, therefore increasing cash available to the company and improving the profitable position of the company. This was a simple task carried out by the accountant, who simply duplicated invoices to retailers, who are usually also a subsidy of Parmalat, to create fake sales, therefore increase accounts receivable. This scheme in particular is said to have been known to almost 300 employees of Parmalat, an indicator of the poor tone CEO Tanzi normalised within the company, and perhaps his use of his position in power that instilled a culture of immorality from the beginning. During the 13 years of active fraudulent activities of Parmalat, few suspicions arose, but were always quickly squashed by Tanzi through collusion. Lead auditor Grant Thornton International has since been found to be one such party who colluded with Tanzi to help cover up the fraud from new incoming auditors. This collusion perhaps can be partly attributed to the significant familiarity threat with Grant Thornton International acting as the lead auditor, then also retained as the auditor of the offshore affiliates. Despite Tanzi's best efforts, suspicions began to grow by 2002, and by December 8, 2003, they all seemed to be confirmed when Parmalat defaulted on a €150 million Eurobond, despite reporting €4 billion on their balance sheet. This simple error brought 13 years of fraud to an end, with employees rushing to destroy any evidence of the fraudulent off-balance sheet activities, and CEO Tanzi, along with a number of key management employees, being arrested for fraud. This sparked the start of a long, thorough investigation in how such a scandal was able to unfold and go unnoticed for 13 years. ASX Corporate Governance Principle 1 states that in order to achieve sufficient corporate governance, an organisation should lay solid foundations for management and oversight. There are a number of recommendations made by the ASX Corporate Governance Council in order to achieve this, including a board charter within the organisation to not only oversee the accounting processes, but also ensure the integrity of management and reporting. Furthermore, the Council recommends that the Board oversees and conducts regular performance reviews of management to ensure managers are kept accountable and are acting in the company's best interests, ethically and financially. The Council also recommends to further solidify foundations of management, an organisation should clearly communicate and disclose the roles and responsibilities of management and the Board. The corporate governance benefits of implementing ASX Principle 1, laying solid foundations for management and oversight, can be reinforced by many key theories, but in the case of Parmalat, institutional theory best explains how such implementation could have prevented the ability for fraud to occur. Institutional theory takes into consideration how a combination of rules, norms, and routines become established as authoritative guidelines within organisations. Parmalat CEO Tansey embedded a culture of unethical practice from early on when he first allowed the fraudulent cover-up of losses. This was the beginning of normative isomorphism that over time established a normality of immorality within the company. That is that the values and beliefs of Tansey and management were so strong they led to conformity of actions within the company. Parmalat failed to lay solid foundations for management and oversight, allowing for years of poor management and ultimately the occurrence of fraud and eventually the downfall of the entire company. Had Parmalat implemented the ASX corporate governance principles recommendations to implement a board to oversee management, it is clear to see any unethical conduct would not have been permitted to occur. Thus, key instigators of such fraudulent activities, such as Tansey, would have been identified and action taken to rectify immediately. This would have been further reinforced had the company had in place regular processes for management performance review. Through this review, the large discrepancies in the company's accounts could have been easily identified and investigated at a company level. Reflective of the normative isomorphism CEO Tansey enforced on the company, had responsibilities of management to act in not just a lawful but also an ethical way been clearly communicated from the beginning, the norms of the company could have been more effectively regulated to ensure such activities as fraud were not normalised like they were in Parmalat's case.
ASX Corporate Governance Principle 2 makes a number of recommendations in order to safeguard the integrity of financial reports. The first recommendation states that the board of a listed entity should have an audit committee with at least 3 independent and non-executive members and whose chair is an independent director who is not the chair of the board. It also states that the committee must disclose the charter, the relevant qualifications and experience of the members, and the number of times the committee met throughout the period. If an audit committee is not appointed, the entity must disclose the alternative way in which they are able to verify their accounts for independence. Recommendation 2 states that before the board approves the financial statements, they must receive from the entity's CEO and CFO a declaration that the financial records of the entity have been properly maintained and that the financial statements comply with the appropriate accounting standards and give a true and fair view of the financial position and performance of the entity. The third recommendation states that a listed entity should disclose its processes to verify the integrity of any periodic corporate report it releases to the market that is not audited or reviewed by an external auditor. Agency theory attempts to explain relationships and self-interest in business organizations and describes the relationship between principals and agents and the delegation of control. It also explains the issues that arise when the beliefs of agents and managers are not aligned. Agency theory supports this principle and provides the most comprehensive explanation regarding the motivation behind Parmalat undertaking such excessive actions in order to conceal their true profits. This principle attempts to combat agency theory-led issues by creating more stringent rules in regards to disclosures and encourages the use of an unrelated and unbiased audit committee to oversee financial reporting. Had Parmalat followed the recommendations outlined in this corporate governance principle, they would have avoided their demise. It is clear to see that Parmalat made no efforts to comply, and had these processes been implemented, the company would have been unable to elude the law for so many years. Due to the company being a family-run business, the management structure was inadequate for that of a listed entity. It is important to note that boards that are full of related members pose a huge risk to effective governance and independence. A look at Parmalat shows that the management led by Tansey used informal management structures, where the Tansey family members were also members of senior management of the group. The company needed to restructure management to reflect regulations and ensure the independence of senior management and members of the board. They also needed to ensure their audit committee complied with the principle.
third ASX corporate governance principle states that a listed entity should instill and continually reinforce a culture across the organisation of acting lawfully, ethically and responsibly. Recommendations listed under this principle include that a listed entity should articulate and disclose its values, have and disclose a code of conduct for its directors, senior executives and employees, and to have and disclose both a whistleblower policy and an anti-bribery and corruption policy. It is also recommended that a listed entity needs to ensure that the board or a committee of the board is informed of any material breaches of the code of conduct or these policies. Stakeholder theory considers the relationships that exist between the organisation and its various stakeholders. According to Edward Freeman, stakeholders are individuals or groups who are affected by or can affect the achievements of an organisation's objectives, and it is important to consider both the ethical and moral treatment of organisational stakeholders. This theory is closely connected with ASX Corporate Governance Principle 3, as Parmalat did not effectively manage its relationship with its stakeholders, including its own employees. It is believed that close to 300 employees were aware of the fraudulent activities taking place at Parmalat, and the introduction of the ASX recommendations under this principle would have likely prevented the corporate collapse, as negative behaviours and activities of its employees then consequently led to negatively affecting other stakeholders, such as shareholders, lenders and other investors. There are 4 main recommendations under this principle. Firstly, have and disclose values. Parmalat should have disclosed a statement of values which would have acted as guiding principles and norms, defining what the company aspired to be and what it required from its employees in order to achieve this. Secondly, have and disclose a code of conduct. This would have articulated the standards of behaviours expected by these stakeholders. It also would have allowed for long-term sustainable value to be built for external stakeholders and contributed to organisational success. If Parmalat had and disclosed a whistleblower policy, then it would have encouraged employees to speak up about any unlawful, unethical or irresponsible behaviour within the organisation through an appropriate policy. And it is therefore unlikely that this fraudulent activity would have been covered up for so many years. An anti-bribery and corruption policy would have also been beneficial, as if any incidents of bribery and corruption had been reported, then it would have indicated issues with the culture of the organisation. These values, code of conduct and policies should have been approved by the board, and the executive team at Parmalat should have been responsible to instill the values and ensure that these codes and policies were adhered to by other employees. Parmalat should have also had a regular training program to ensure that all employees were aware of these policies. This would have set clear standards and guided behaviours of employees at all levels. Implementation would have allowed for a positive culture to be fostered. Reporting of any breaches to the board would have indicated with the culture embedded by the organisation. Regular internal audits should have also been taking place to ensure adherence to these values, codes and policies.
The demise of Parmalat uncovered that the entity not only failed to comply with Australian corporate governance principles, but also with international governance principles. One in particular is an Italian principle, which states that mandatory audit firm rotation is required after 9 years for companies. Whilst Grant Thomson did cease to be the acting audit firm for Parmalat, they recognised that these rules did not apply to non-Italian entities, and therefore remained the auditors for offshore subsidiaries, including Bonlat. This allowed the group to continue to collude and hide fraud tactics, and is said to be the beginning of the creation of fictitious assets. Furthermore, this indicates that if the firm was rotated as per Italian regulations, the corrupt actions of the entity would not have continued for as long as they did.